Welcome back to Squawk on the Street. Squawk Box. Rick Santelli here live at CME HQ with some very important breaking news. Let's start out with the trade balance, which we know is a deficit. This is the January number, a new record. We've never had a trade deficit as big as today's, minus $131.4 billion, $134.4 billion. And keep this in mind, pre-COVID, you know what the biggest trade deficit we had was? It was $68.3 billion. So, hey, how about pretty much doubling that number? Now, let's get to productivity, shall we? If we look at non-farm productivity, by the way, you know why they call it non-farm productivity? Because if you used agricultural data in this, it would swamp because it's been so productive. 1.5% is productivity. That would be the best since the third quarter of 24 when it was a little bit over 2%. Unit labor costs, 2.2. That's definitely better than we were expecting, meaning lower. Where productivity was higher, unit labor costs come in at 2.2%. That follows 3%. 2.2%, well, it would be the smallest also since the third quarter when it was half of 1%. Now let's go to initial and continuing claims. 221,000 on still an unrevised 242,000. So we're down 21,000, and it really does show you that there might have been some seasonalities that popped up that last week. 221,000, well, we had 220,000 on the second week of February, just to kind of put a face on it. We're kind of right in the middle there. And continuing claims, a different story. They moved up very close to 1.9 million, 1,897,000. Remember, the last time we had a read at 1.9 million, it was literally exactly at 1.9 million. That was second week in January of this year, and that harkened back to, well, November of 2021. Very quickly, I want to highlight some things. I was shocked this morning. I know many wanted and looked towards the ECB to lower rates 25 basis points. But I thought after yesterday's historic rise in yields, maybe they would stay pat. They didn't. They did lower. And another issue, we were all talking yesterday about how the jump in yields, 30 basis points in a boon, was the biggest jump in yield since 1990's reunification. However, if you're a real bond guy, the VAR, or the value at risk, basis points were more valuable in 1990. Therefore, what we see, they are, yesterday's loss based on value was the biggest in history, because the value of basis point in 1990 is different than the value of a basis point today. When it was at 9%, it was less. We don't want to get lost in the weeds there. Another thing, let's show a chart. If you look at our yields, Joe, minus yields in Europe on the 10-year boon, that difference now is the closest they've been in 20 months, going back to July of 23. We really want to pay attention to that. Capital flows, many, and the interest rate differentials, pricing currencies, all are going to pay attention to that. And we continue to see the world's yields really did follow yesterday's pop in the German yield curve. Back to you.